Hey guys, this is Eureka John with the Eureka Street Crypto Hub coming at you live from the factory. And today is January 21st, 2021. And it is Thursday at 12:38 in the afternoon, and I'm on lunch break. And there's just so much going on here. All right, what's up? And I just wanted to log on. I haven't been able to log on for a while. I've been working on some new videos and some new stuff, actually formal videos to send you guys. And I'm working on a long, in-depth video on smart contracts and kind of going deep into the history with Nick Szabo and Hal Finney and eGold and DigiCash and all that stuff, and even digging up articles and academic papers from way back in 1977. So that's how deep I'm going. I'm hopefully going to be recording that this evening. If not, I'll record it over the weekend. But did want to log on and touch base and just kind of keep those few people who actually tune in and listen up to date with what's going on. There's been a lot going on in the markets for the past week, and there's just way too much to cover right now. Let me go ahead and make sure this music is off. All right, a lot of bells and whistles and things to keep track of here. All right, so I got CoinGecko up on the screen. Let me go ahead and get in there and see what's up. Let me go to CoinGecko. So as you can see from CoinGecko, we got a lot of red in the streets right now. It means the market is retracing. Look at that 24-hour call. Just red all the way down. There's a few green blips here and there, but for the most part, it's a lot of red all the way down to the first top 100 tokens. Bitcoin's all the way down to 31,874. I personally am thankful that I can even say that Bitcoin is all the way down to 31,000. I mean, seriously, if you're going to buy right now, I mean, I'm not a financial advisor, but right now it's probably a good time to buy. Ethereum is at 1,200. Polkadot, which has been roaring up 46% in the past 7 days, is at 16.16. So $16.16. XRP. I don't even know about XRP. I mean, some people say it's gonna, after all this SEC lawsuit stuff, it's just gonna completely explode. You know what? I'm not married to any of these tokens, and I don't have to go through them thick and thin. There's just too much confusion and uncertainty and vagary about XRP. I just ducked out, man. I'll deal with it when the drama ends, and if I miss out on some hypothetical chance that it's gonna shoot through the roof, then that's fine with me. But whatever. Cardano's at 33 cents, Litecoin's at 133.70, Bitcoin Cash at 439.49. No idea how that's still around. Chainlink, $19.63. It got up to 21, I think even $22 at some point in the all-time high in the past few days. But Chainlink is doing really good, and a lot of my smart contract video is going to cover the God protocol and Chainlink, and the video is going to be entitled The God Protocol. So you want to tune into that. It's going to be a really good in-depth video to really learn a lot of use cases and what all this God protocol is all about, and maybe even some foreboding future predictions or premonitions of how Chainlink is going to be a part of our everyday life, which I believe it is, whether we know it or not. Let's see, here we go. We got Stellar, 26 cents. It's like Stellar and XRP are kind of partners in a way, not officially, obviously, but they both work on remittances, international payments, and stuff like that. They're both working very closely with the banks. So I'm surprised that they're both just not exactly hand in hand. But I don't know. I'm not invested in either of them anymore. I did have a little bit of Stellar, and I had XRP, and I just got out of both positions. I'm in it for technology that can change the world. Chainlink to me is, Bitcoin is, Ethereum is. I like the libertarian nature of it. I like the idea of bucking the banking system and being able to work outside and around this credit slavery that we're all subjected to. And XRP and Stellar, they're not exactly representing those ideals. So I'll go ahead and decline. So we got Aave down to 166.60. It got up to, I believe, 200 at some point. Aave is awesome. I'm totally on board with Aave. It's a way to circumvent the credit system. It's decentralized finance. Its token has been exploding with the explosion of this decentralized finance coming into play on top of Ethereum. It's built on Ethereum. Definitely look into Aave. Synthetics is another one that I've been really jumping into, even though it's down pretty hard. But it did get up to about $18. So VeChain, it's up at 3 cents. It's been sitting around 2 and 3 cents and got down to 1 cent, but it's been just kind of hovering around here for the longest time. Honestly, I finally just got rid of my VeChain position and I got into some other stuff. It's just got such a huge market cap and a huge supply and all that stuff. And a huge supply, not market cap. It's just got such a huge supply. I just don't see that it's gonna be really hard to move this to profitable territory. That's all I'm saying. And then Uniswap is doing good at $8.10, and that's another DeFi protocol and decentralized automatic market maker and decentralized exchange. Theta Network is down to 184 from hovering around $2, but Theta Network has a lot of really good stuff going on with it. They're partnering with all the big guys, Google, BigQuery data system, and basically what Theta Network does is it shares bandwidth. They set up nodes to share bandwidth, so video streaming will be crisp and smooth and consistent. And they set up a reward system for people who share their bandwidth, and the Theta players, kind of like the Flash players, which you can watch and stream on as well, they are all set up as nodes, and then you can earn the T-Fuel by sharing and streaming. I'm actually broadcasting on Theta Network right now. So let me go over here and check that broadcast real quick. Okay, everything's running smoothly as expected. And that's Theta Network for you. I love it. I think there's a huge future in Theta Network, and I'm actually running a Guardian node at the house as well. I could go down the list, but I'm not going to. I really just kind of wanted to highlight on some topics. And for those of you who see Bitcoin crashing down to 31,000, God forbid, that we have a market reset after we flew up to, I believe, 41,500 at least, maybe even 42,000. Let me check this out here. So Bitcoin flew up to all-time high. Let's see here. All-time high of $41,940.09 on January 8th. And, that's just a tad below 42,000 and not too shabby. But you can't expect it to continue that way. And I'm actually thankful that it's crashing down to 31,908. I would like to even see it go a little lower, be a chance to scoop some up. But this is also a really good time, not good time, but it's a predictable time that a lot of newbie investors would be saying, well, I knew it. I knew it was a Ponzi scheme. I knew Bitcoin was a scam. It's just funny money. It's fake internet currency. It's a joke. It's a tulip scam. It's a tulip bubble. That you hear it all. And, it's not digital gold. It has no value. It's thin air. And, I'm reading through comments on Facebook and other platforms. I just see it all. And they just aren't doing the proper due diligence and the research. And it just makes people like me, in a way, kind of thankful keeping those dumbasses out of out of everything. But at the same time, the adoption is great. It is driving up the value, but people say, well, isn't that part of a Ponzi scheme? You need more people to bring it in. No, there's actually a really great article on why Bitcoin is not a Ponzi scheme, written by Lyn Alden, and she's a very smart woman. Let's go down here. This is her. She's an investment strategist at Lyn Alden Investment Strategy. She holds a bachelor's degree in electrical engineering and a master's degree in engineering management with a focus on engineering, economics, and financial modeling. Lyn has been performing investment research for over 15 years in various public and private capacities. I've seen interviews with her. She's a very smart woman. She knows what she's talking about, and she goes point by point of why Bitcoin is not a Ponzi scheme. And I will put a link to this video in the YouTube video when I upload it. But she defines a Ponzi scheme. She said, to start with tackling the topic of Bitcoin as a Ponzi scheme, we need a definition. The U.S. Securities and Exchange Commission defines Bitcoin, and not Bitcoin, defines a Ponzi scheme as an investment fraud that pays existing investors with funds collected from new investors. Ponzi scheme organizers often promise to invest your money and generate high returns with little or no risk. But in many Ponzi schemes, the fraudsters do not invest the money. Instead, they use it to pay those who invested earlier and may keep some for themselves. With little or no legitimate earnings, Ponzi schemes require a constant flow of new money to survive. When it becomes hard to recruit new investors, or when large amounts of existing investors cash out, these schemes tend to collapse. Ponzi schemes are named after Charles Ponzi, who duped investors in the 1920s with a postage stamp speculation scheme. So some things to look out for with Ponzi schemes are as follows: high returns with little or no risk, overly consistent returns. Investments go up and down, just like Bitcoin's going down right now. It goes up and down. There is no such thing as a no-risk investment. So anything that says it's a guaranteed investment opportunity, or it's always 100% on time and always going up and up and up, be wary. And then there's unregistered investments. Ponzi schemes don't want to mess around with the SEC. That is the purpose of the SEC, to protect us investors from these wily Ponzi schemes, scam artists, pyramid scheme, multi-level marketing people. So stay away from stuff like that. Unlicensed sellers. Federal and state security laws require investment professionals and firms to be licensed and registered. Most Ponzi schemes involves unlicensed individuals or unregistered firms. And then secretive, complex strategies. Just like the Wizard of Oz, he was running a Ponzi scheme, and then behind all the smoke and mirrors was nothing of substance. If you don't understand or can't get complete information about these investments, avoid them. And then issues of paperwork. Account statement errors may be a sign that funds are not being invested as promised, and difficulty receiving payments. Be suspicious if you don't receive a payment or have difficulty cashing out. Ponzi scheme promoters sometimes try to prevent participants from cashing out by offering even higher returns for staying put. So those are the characteristics of a Ponzi scheme. So we'll go on to why Bitcoin is not a Ponzi scheme. But first, I do want to show you a really good podcast. Let's see, podcast Charles Ponzi. And I'm on lunch. I'm not answering that phone. This is my break, man. So Parcast is a really good podcast, and you can get it on Spotify. Just search Parcast, Parcast, on Spotify, and you'll come across these. There's a whole bunch of different podcasts, and they do a really good job. And they do one on Charles Ponzi. So they have all these. I've listened to dictators, incredible feats, very presidential, historical figures, movers and shakers. I've listened to a ton of these different podcasts, and it just goes down the line. And they have one on Charles Ponzi, and let me see if I can search for it here. Let's see. I think it was Famous Fates is what it was under. Search. Okay, here we go. Charles Ponzi. Now we'll do this search here. No results found. Come on, I know you're on there. Okay. Well, con artist. Okay. Yeah, it's under. There's one under Famous Fates. Charles Ponzi. Famous Fates. Yes. Falls from Grace is what it's called. Okay, so parcast.com/history. So they're in historical figures. And it's in Falls from Grace. There's some other really good episodes. The Bobby Fischer one about the chess player was really good. Let's see here. Fatty Arbuckle, that was a good one. Howard Hughes was a good one. Um, I mean, there's so many good episodes on here. Um, yeah, let's go down the list. And maybe I missed it. There's just a buttload here. I don't know. There's a ton here, but yeah, go to Parcast and historical figures and Falls from Grace, and then you will find that podcast about Charles Ponzi, and you'll understand a lot more of this. Anyway, back to this article. Why is Bitcoin not something that would fall under the definition of a Ponzi scheme as established by Charles Ponzi back in the day? Bitcoin, it goes through the whole launch process, explains what Bitcoin is, and explains about Satoshi. And Satoshi is this anonymous figure who invested, or who created Bitcoin. And Bitcoin started off as an academic paper. It started off as a paper solving an academic problem, related to computer science challenges related to digital scarcity. It contained no promises of enrichment or returns. In no way did Satoshi or Hal Finney or any of these people at the early days of Bitcoin ever expect it to become what it is. And they never postulated any type of value or any type of staying power that it would have. This was created as a way to express some libertarian ideals and solving some computer science related types of issues. Investment returns are not promised. Satoshi never promised any investment returns, let alone high investment returns or consistent investment returns. In fact, Bitcoin was known for the first decade of its existence as being extremely high volatility speculation. For the first year and a half, Bitcoin had no quotable price, and after that, it had a very volatile price. That's not something a Ponzi scheme tries to promote. And in the white paper, there's a lot of quotes by Satoshi. The white paper, you should read it. It's, I believe, about 12 to 18 pages, somewhere right around there. It's not super long, and it's not as difficult to read as you would think, but it is an academic paper. Here he says, let's see, in this sense, it is more typical of a precious metal. Instead of the supply changing to keep the value the same, the supply is predetermined and the value changes. As the number of users grow, the value per coin increases. It has the potential for a positive feedback loop. As users increase, the value goes up, which could attract more users to take advantage of the increasing value. And that's one of the few things he said about its actual value. And let's see here. A rational market price for something that is expected to increase in value will already reflect the present value of the expected future increases. In your head, you probably do a probability estimate, balancing the odds that it keeps increases. And he said, I'm sure that in 20 years there will either be very large transaction volume or no volume. So he's not making any types of promises. He's not trying to be a charismatic leader. Promising unusually or higher or consistent investment returns is a common red flag for being a Ponzi scheme, and with Satoshi's original Bitcoin, there was none of that. And over time, Bitcoin investors have often predicted very high prices, and so far those predictions have been correct, but the project itself from inception did not have those attributes. And then Bitcoin is open source. It's the opposite of secrecy, so there's no smoke and mirrors going on here. Anybody can download the code. Anybody can run a node on their laptop. Anybody can build on top of the Bitcoin network, and they have. That's what's called a fork. If anybody wants to make a change to any of these types of blockchain networks, they have to do a majority consensus, and if they don't, then it becomes a fork. And that's what Bitcoin Cash is. It's what Bitcoin SV is, and Bitcoin Gold. So don't be fooled by all these other Bitcoins out there. BTC, that is the trading symbol. That is the real, the original, the only. Of course, there's no issues with paperwork, difficulty receiving payments, referencing some of the SEC flags of Ponzi. The entire point of Bitcoin is not to rely on third parties. It is immutable and self-verifiable. It can only be moved with a private key associated with a certain address, and if you use your private key to move your Bitcoins, there's nobody who can stop you from doing so. So Bitcoin is open source. Anybody can see the transactions on the network, even though they're anonymous. All you see are numbers moving around and transactions moving around, but you can't see who's doing it. But it is open source. Everything is right there to show you. In that way, there's no secrets. There's no pre-mine. A pre-mine is whenever a new token comes out and is developed, and the original miners and the original developers and the original investors pre-mine some tokens for themselves before they actually issue the token out to the public. That is frowned upon. I don't think it's necessarily illegal, but it is definitely frowned upon, and Bitcoin does not do this, and that is also something you might want to look out for as not always a Ponzi scheme, but something that might be a little sketchy. Ripple, which is XRP, they pre-mined 100 billion XRP tokens, with the majority being owned by Ripple Labs, and gradually began selling the rest to the public while still holding the majority, and is currently being accused by the SEC of selling unregistered securities. So watch out for that. Also going back up here too, regarding the open source, there are of course some bad actors in the surrounding ecosystem, people relying on others to hold their private keys rather than doing so themselves. Some have sometimes lost their coins due to bad custodians, and it's not because the core Bitcoin software failed. Third-party exchanges can be fraudulent or can be hacked. Phishing schemes, other frauds, tricking people to reveal their private keys. So always guard your private keys. Never share it with anybody trying to get it from you, unless it's like your kid or your parents or your spouse. But I'm just saying, if anybody online is trying to say that they need to do an update to your system and they need your private keys, don't ever give that away. Don't fall for those scams, and don't ever fall for the scam where they say, well, if you give me 1 Bitcoin, I'll give you 10 Bitcoins. No, it doesn't work that way. And exchanges and any type of custodian services, if you don't hold your keys, it's not your crypto. Not your keys, not your crypto. So these are the bad actors. Stay away from them. You can use exchanges as well to trade, but try not to keep your coins and your Bitcoin on exchanges where you don't have the keys to your wallet. Anyway, leaderless growth. Bitcoin doesn't have a leader. Satoshi is anonymous. Satoshi could be a group of people. I don't know who Satoshi is. You don't know who Satoshi is. Nobody knows who Satoshi is. A lot of people have postulated who they think Satoshi might be. I personally think Satoshi is probably Hal Finney. Hal Finney died in 2014. Hal Finney was the person who received the first Bitcoin transaction from Satoshi. So it's probably Hal Finney passing it on to himself to test out. Let's see, some developers have been extremely important, but none of them are critical for its ongoing development and operation. So none of the original developers are now part of any of the ongoing development and operation of Bitcoin. In fact, even the second round of developers after Satoshi largely went in other directions. Hal Finney passed away in 2014. Some other super early Bitcoiners became more interested in Bitcoin Cash and other various projects at various stages. As Bitcoin has developed over time, it's taken a life of its own. So Bitcoin has grown from a core group of people who were libertarians and just trying to create its own monetary system to solve some computer science problems. This has grown into what it is today, this monstrosity that is bypassing the banks. So anyway, here we got another thing, unregistered investments, unlicensed sellers. The only items on the red flag list that may apply to Bitcoin are the points that refer to investments that are unregulated. It doesn't necessarily mean that something's a Ponzi. Bitcoin is unregulated, and that's kind of the beauty of it. In the early days, buying some magical internet money would of course be a highly risky investment for most people to make. Bitcoin is designed to be permissionless, to operate outside of the established financial system with philosophical leanings towards libertarian cryptographic culture and sound money. For most of its life, it had a steeper learning curve than traditional investments since it rests on the intersection of software, economics, and culture. Some SEC officials have said that Ethereum and Bitcoin are not securities, and by logical extension, have not committed securities fraud. A security is something that you invest in, knowing that you will receive a profit, that it will increase in value. And Bitcoin is not security; it's more of a commodity. So let's see here, and it goes on. And then, so their conclusion of this section is clearly not a Ponzi scheme. It was launched in the fairest way possible. Satoshi first showed others how to do it with a white paper in an academic sense, and then he did it himself months later, and anyone could begin mining alongside him within the first days, as some early adopters did. Satoshi then distributed the network of the software to others and disappeared, rather than continue to promote it as a charismatic leader, and so far has never cashed out. So that there is a ton of Bitcoin from the early days just sitting there, and you can see it. You can see it on the blockchain, and that's the beauty of the open source blockchains. You can see every transaction. You can see everything on the blockchain. You can see all the amounts of Bitcoin that are sitting there, and every transaction made. And a lot of the early Bitcoin hasn't been touched. And some people say, well, probably because Hal Finney died, and that may be the case. But there's other people that are candidates to be Satoshi, and there's other reasons why it may have been sitting there. That goes beyond the scope of this video, but you can just do a search of who is Satoshi Nakamoto, and you'll see tons of videos. And then there's a broader definition of a Ponzi. Since this clearly Bitcoin does not apply to the narrow definition, then they go into the whole thing of because the narrow Ponzi scheme doesn't apply to Bitcoin, some folks have used a broader definition to assert that it's one. Then they compare it to gold. Some people assert that Bitcoin is a Ponzi scheme because it relies on an ever larger pool of investors coming into the space to buy from earlier investors. To some extent, this reliance on new investors is correct. Bitcoin keeps growing its network effect, reaching more and more people in bigger pools of money, which keeps increasing its usefulness and value. All right, fine. Similarly, Bitcoin relies on the network effect, meaning a sufficiently large number of people need to view it as a good holding for it to retain its value. But a network effect is not a Ponzi scheme in and itself. Prospective investors can analyze the metrics of Bitcoin's network effect and determine for themselves the risk reward of buying into it. So just because it has a network effect does not mean it's a Ponzi. Anything needs a network effect. A network effect is basically me telling somebody about something, then them telling 2 people, then them telling 4 people, and then something growing and needing that network effect in order to grow in value. And that's pretty much everything that I can think of. And then the Bitcoin versus fiat banking system. And fiat, for those who don't know, are dollars or anything printed by a government entity. Firstly, fiat currency is an artificial commodity in a certain sense. A dollar in itself is just an object made out of paper represented on a digital bank ledger. Same for the euro, the yen, and other currencies. It pays no cash flows on its own, although institutions that you hold it for might be willing to pay you a yield. Secondly, you organize these pieces of paper and their digital representations in a fractional reserve banking system, you add another complicated layer. If about 20% of the people were to try to pull their money out of the banks at the same time, the banking system would collapse. Fractional reserve is basically the bank keeps 10% and lends out 90% on interest, and that's how they make their money. If everybody were to make a run on the bank like they did in 2008, it causes an economic collapse because the banks cannot sustain that. That, to me, reeks of a Ponzi scheme. So fiat money, dollars, our Federal Reserve System as it is a Ponzi scheme. So anybody saying that Bitcoin is a Ponzi scheme, they're pointing at the wrong one. The banking system is a permanent round of musical chairs. There are more kids than chairs, so they can't all get one. If the music were to stop, this would become clear. However, as long as the music keeps going with occasional bailouts via printed money, it keeps moving along. Banks collect depositor cash and use their capital to make loans and buy securities. Only a small fraction of depositor cash is available for withdrawal. A bank's assets consist of loans owed to them, securities such as treasuries, and cash reserves. Their liabilities consist of money owed to depositors, as well as any other liabilities they may have, like bonds issued to creditors. In the United States, banks collectively have about 20% of customer deposits as cash reserves. So if only 20% of the people suddenly go withdraw their cash from the bank, then you have an entire banking system collapse. And they try to ease this with quantitative easing, which means printing that money, UBI, stimulus checks, and all this UBI. A lot of people say is great, it's helping people survive this COVID. They're creating this UBI and these stimulus checks out of a problem that they created. They created the problem, they provide the solution. And then they're the heroes for it. And it's quantitative easing. It's just printing of money, and they're not going to give you Bitcoin or something that is actually valuable. They're just printing out of thin air. And of course, the average Joe, and of course, I'm going to use my stimulus money if I get it. I'm going to pay bills with it. I'm not going to sit there and turn it away. But the point being is that it's basically worthless, and it's going to be worth less and less and less the more time goes on. And the more there is, the less it's worth. I mean, it's basic economics. So similarly, the total amount of physical cash in circulation, which is exclusively printed by the U.S. Treasury Department, is only about 13 as much as the amount of commercial bank deposits, and only a tiny fraction of that is actually held by banks as vault cash. There's not nearly enough physical cash by design for a significant percentage of people to pull their capital out of banks at once. People run into difficulty receiving payments if enough of them do so around the same time. So it's really convenient how the bank suddenly has errors and mechanical failures and difficulty receiving payments and slow transaction speeds when everybody does bank runs. So anyway, then other people say, well, there's frictional costs. Basically are the costs to maintain the Bitcoin network and to mine. It's a lot of expense, the electricity and the hardware, and the personnel required. They say all that frictional costs are characteristics of a possible Ponzi scheme. Similarly, gold miners put plenty of money into personnel, exploration equipment, and energy to extract the gold from the ground. And the purifiers and the minters and the people that store it and ship it. There's plenty of expense and friction in gold and in fiat currency. So the summary is the network effect is not a Ponzi. The broadest definition of a Ponzi scheme refers to any system that must continually keep operating or to remain functional, or that it has frictional costs. Bitcoin doesn't meet this broader definition of a Ponzi scheme any more than the gold market, the global fiat banking system, or less liquid markets like fine art, fine wine, collectible cars, or beachfront property. In other words, if your definition of something is so broad that it includes every non-cash flow store of value, then you need a better definition of a Ponzi scheme. So yes, Bitcoin requires ongoing operation and must reach a significant market capitalization for the network to become sustainable, but I think that's best viewed as a technological disruption, and investors should price it based on their view of the probability of it succeeding or failing. It's a network effect that competes with existing network effects, especially the global banking system. And ironically, the global banking system displays more Ponzi characteristics than all the others on the list. Final thoughts by her. Any new technology comes with a time period of assessment. Bitcoin is only 2008, 13 years old? Yeah. So any new technology comes with a time period of assessment and either rejection or acceptance. The market can be irrational at first, either to the upside or downside, but over the fullness of time, assets are weighed and measured. Bitcoin's price has grown rapidly with each 4-year supply halving cycle as its network effects continue to compound while its supply remains limited. So anyway, check this article out for yourself. There's still more stuff. She does a great job in explaining this. Let me check the stream real quick and make sure that the theta stream's going good. All right. What's up? Good is fantastic. And thanks for tuning in. Let me give you a gift here. I'll shoot you over some tea fuel. Yeah, I appreciate you tuning in. This is just my lunchtime episode. I do have more formal and better videos, but there's so much news and so much going on. I just feel like I have to talk about it. Anyway, if Bitcoin were such a Ponzi scheme, as a lot of people who don't understand it just like to immediately point fingers. And I don't know why they get so irritated about people putting their money into something that they think is going to explode in value when it's not their money that they're worrying about. But anyway, Grayscale, yeah, it's one of the largest retirement and investment companies in the entire world, and they are buying up billions of dollars worth of Bitcoin right now. You have BlackRock right now. All I gotta do is Google BlackRock Bitcoin, and let's see what we got here. I use Start Page, by the way. It's not tracked, and they won't use your information against you or collect your information to make money off of you. So use startpage.com instead of Google. BlackRock takes first step into crypto exposure into 2 funds. This is just yesterday, and BlackRock is also one of the world's largest investment firms. We had MicroStrategies a while become the first publicly traded company. They bought like $500 million worth of Bitcoin to start with, and they keep buying. We have Square that has been buying Bitcoin. You have PayPal buying Bitcoin. So let me think. Some random guy on Facebook telling me Bitcoin's a scam and a Ponzi scheme, or BlackRock, Grayscale, PayPal, MicroStrategies, Paul Tudor Jones, Bill Miller, all these real famous people coming in and throwing their personal and business money into Bitcoin. That doesn't sound like a Ponzi scheme to me. Sorry. Sorry, guy on Facebook. But yeah, I'm not going to listen to you. So yeah, that's kind of where things are. Why Bitcoin is not a Ponzi, and let's see if anything has changed since I first logged on. Let's see, Bitcoin is still at $31,927. Not bad, and I get my paycheck tomorrow, and I think I will throw a little bit more money into Bitcoin and probably some into Ethereum as well. I didn't touch on Ethereum today, but I do believe Ethereum is also going to be highly profitable. I'm mining Ethereum at home as well. I'm super stoked on it. So anyway, I will talk to you guys tomorrow, or probably tonight actually, when I do this video about smart contracts. So tune in, and I will talk to you later.